I'm glad you're wearing those glasses, man. I mean, ever since you started wearing those glasses, markets have gone up. But today that new glass magic is also not working. You should wear double glasses today.
Maybe I'll go back to my old ones. They stopped working.
What's next?
Yeah.
What's happening? What are you
So
doing? What are you telling your distributors? What should our viewers do?
Nikhil, thank you for having me on your show, and a very good morning to, sorry, a morning to all your viewers. It's not good at all. But anyway, so basically it's not about tariff parity at all. This is about a trade parity. I mean, I'm buying so much from you, you buy back so much from me. I don't think that's gonna work, actually, Nikunj. I mean, that's messy, right? I mean, they could have very well done on tariffs. I mean, what did Vietnam? They say I'm cutting down tariffs to 0%. Now, what's your response? Then the response of the president was, "Thank you very much." He didn't even get back to those guys about. So basically, it's about that I'm buying so much, you buy back so much from me. That's not going to work globally. It's a mess. And frankly, I mean, the last time one saw these kind of tariffs was in 30s. By the way, the two gentlemen who passed the tariff bill in 30s, they lost their job within 2 years. They were moved out of the Senate in 2 years' time. So I don't know what's actually. I'm in Sridhar's camp. I mean, totally confused about where this is headed. I'm sure so is America. I mean, I don't know what they're trying to play at. But the fact is, this can lead to a lot of mess, and mess in the sense that if trade wars break out, this is not a healthy sign for the world. I mean, GFC was 2008, I'm talking about, was a issue which could not be resolved easily, right? So that's why it impacted the whole world. But this one can be easily resolved, provided America backs off a bit, compromises a lot, and then goes back to the table and says, okay, guys, I mean, they won't agree that they made a mistake in the way they calculated the tariffs as such, but probably say that, okay, fine, I got my pound of flesh somewhat, and then back off. Only 10 things will stabilize, Nikunj. Otherwise, this is, and I hope it does fast, because otherwise this can lead to a lot of pain.
Okay. So Dinshaw, every crisis creates an opportunity. History has told us never waste a crisis. How are you looking at converting this crisis into opportunity?
So basically, Nikunj, what we did was, I mean, we actually were flummoxed by the move on Thursday, when after announcement of tariffs, the markets were flat. So we did quite a bit of juggling around with me that day itself. I mean, we cut down our net in our long short fund to close to 50 as such, which was at around 64, 65%. And frankly, I mean, in hindsight, I think we would have done better by cutting down to close to 40 or something. But anyway, we didn't jump the gun. So we brought it to 50, or in terms of our cash holdings, we trimmed a bit. We moved out of certain stocks which we knew were going to be impacted by the tariffs in the US. We are basically hiding in, I'm using the word hiding because I think that is what is the right word to use, in hiding in stocks where we believe that they may be not that much impacted by these craze and tariffs. I mean, in the longer term, I hope this they will get impacted. Even in the longer term, they'll get impacted. But in the immediate short term, all the domestic facing guys and things like that, we are hiding those, and we got rid of all the stocks which we felt were going to be impacted by this tariff wars as such going forward. So that's what we're doing right now. Frankly, I mean, looks like the future is fairly hazy. I mean, things have to clear out within a month's time before you can take a call on the markets.
Okay. Let's look at what is at play. Tariffs are coming clearly on countries which have a large trade deficit with US. That includes China. So can I say that if the tariffs on China will continue in a trade war between India and US, you know, like they say in Hindi, बिल्ली की झगड़े में बंदर का फायदा होता है. So let's look at where the opportunity is. The China +1 in India will become even more stronger. The domestic businesses in India will be beneficiary because commodity prices, they go down. Interest rates will come down. Crude has already gone down. So can I start looking at the positives here, which is that don't buy steel but buy cement, don't buy global but buy local, don't buy IT, buy banks, but do buy those fancy glasses, even if they're made in China.
So, okay, no, I agree to an extent here. So basically, like the oil and gas plays, the downstream guys will benefit because crude has collapsed. But mind you, the crude is collapsing because there's no global demand. I mean, people are looking at a global stagflation, if you will. I mean, not a recession. I'm not calling out a recession right now, but like a high inflation with no growth, right? So that's what I think the world is calling out right now. That's why. So there are reasons for this to happen. And having said that, you said the tariff war is actually between US and China. I don't think at this stage, I mean, probably 20 years back, China could have been ignored. But today, it's a major trading partner with the world. Right? I mean, a manufacturing base for the world. So I don't think that can be so easily ignored. In fact, one of the arguments that people gave me on that Thursday itself, when Pharma was up for some reason, because I think they had left out Pharma from that, and the next day the president came and said unheard of tariffs on Pharma will be applied later. But the fact was that even in Pharma, I mean, bulk drugs, bulk of them are getting imported from China, even for India. Forget about the US. So if tomorrow China wants to hurt US, they can very well impose their own export tariff on bulk drugs and say, okay, 20% tariffs. Where are we going to be left? Forget about the Indian facing pharma companies. They'll also have to increase prices. So I don't think it's going to be that easy. Even today, I mean, we are exporting $10 billion worth of iPhones to US. Where are the components coming from? They're coming from China, right? I mean, our valuation is what, 2-3% on that particular shipment. So we are in a flux today. I don't think it can be ignored. As I said, Nikunj, this has got global repercussions. We can so easily say that maybe China will hurt more. Maybe they will. India may come out smelling of roses, if you will. I mean, I think India will come out stronger. In fact, that's what my feel is. But the whole thing has to get over soon. There has to be some solution found soon. Otherwise, this is going to be a mess.
Sure. Specifically on the earnings cycle, any sector that you wish to flag off, because some of those globally linked sectors, be it IT, the markets are definitely factoring in a lower growth at this point in time versus what was anticipated earlier. But at this valuations, given the sell-off, any sector that you will be closely tracking with respect to the earnings cycle?
So basically, obviously, I mean, we are, as I said, that we are also looking at domestic focused companies. So healthcare, and that also within healthcare, basically hospitals is one sector that we are very comfortable with. I think in the immediate couple of quarters, I don't think they'll be impacted by what's happening globally. Coming to hospitality, again, hotels, we are fairly bullish on that. Again, I believe that the next couple of quarters, they should be fairly insulated from what's happening globally. In fact, domestic consumption per se, I think that's going to do fairly okay. Again, but by the way, all these things are next couple of quarters, right? I mean, if things don't evolve on the tariff front, on the trade front, then all bets are off of the table. And obviously, our favorite, all-time favorite, which is the BFSI sector, I think, in fact, Nikunj asked me that question and I forgot to answer that. I think RBI can have a ball right now. I mean, they can release a lot of liquidity in the system. They can cut rates and still get away with it because the way the dollar is weakening vis-a-vis the global currencies, I think India, INR, I mean, today it's weak, but I think they have a leeway to play around with that too as such. So here is what we are with. I think we've got a very limited set of stocks to be with. And unfortunately, by the way, the March quarter numbers, they're not going to be exciting. They're not going to be exciting at all because I think at the best case scenario is a flattish kind of earnings growth for the Nifty per se. And going to FY26, single digit kind of growth is what is being talked about right now. So all in all, only limited sectors where you can see some upside happening.
Dinshaw, thank you very much. I know you've got a very tight schedule ahead, but you accommodated this request. So thank you very much. Meera,
if you like this video, then like, share and subscribe to ET Now.